Good morning, everybody. It's Wednesday, November 13th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 1 3/4 at 4.26 3/4. January soybeans were down 2 1/4 at 10.08 1/4, and December Chicago wheat was down 8 at 5.44 1/4. This morning, we had a couple of export sales announcements. 357,000 metric tons of corn to Mexico for 24. Also announced 290,820 metric tons of corn to unknown destinations for 24. Also had consumer price index out this morning. Inflation upticked slightly here, but was within estimates, up 0.2%, bringing the 12-month inflation number to 2.6%, which was just slightly higher, up 0.2%. Yesterday afternoon, we saw crop progress and conditions. Corn and beans wrapping up here pretty good nationally. Corn 95% harvested. That's up from 91% a week ago. Soybeans 96% harvested. That was slightly higher than the 94% from the prior week. Winter wheat improved 44% in the good to excellent category. That was up 3 points from last week, and just about the average. 45% is the average for this time. And then the plantings, winter wheat 91% planted versus 87% last week and 93% for the average. Dustin, maybe a few thoughts to kick us off here this morning, and then we'll throw it around the room.
Thanks, Dan. Yeah, not much really, earth-shattering this morning. I'd say the ongoing sales are just a tell of what has been happening. We know that funds have gotten long. We've got really good front-loaded demand from Mexico still for corn. That's driven corn prices to rise over 11% off the lows. The dollar index is extremely strong, and so that's probably weighing on flat price, specifically both the front and the back end of the curve for corn. And the front end happens to have a bunch of demand at the moment. Global stocks to use ratios ex China is something that's still kind of top of mind right now. You look at the tightness of corn, still at like 10.5% stocks to use ex China. And we were in these zones 2021, 2022. What was different about those times than now? Well, we had huge uncertainty. We had China buying the U.S. first. U.S. stockpiles were quite low. We also had the dollar index down in the lower 90s. So all of those things, I think, played a bigger role in why that pricing mechanism is so different than it is today. And we certainly have the ability to see a large enough second season Brazilian crop to come in and feed those world needs while we still have a large enough carryover. So the setup is there that we might not really run into tightness. One little hiccup in both either the currency or South American second season corn production, which won't be until next spring, early summer. That's where things could get interesting again for corn. And I think the market should be considering that for risk premium and the need to encourage enough corn acres for 2025 in the U.S. So that's just purely opinion based. The other thing to note too, and I'm sure Justin will talk about this a little more, but the EPA, Lee Zeldin appointment, there's huge uncertainty there. Apparently he had voted, against RFS, during his time in Congress. And I think soybean oil reacted negatively yesterday. That's probably a big part of why soybeans led the charge down on lower crush margins yesterday.
Yeah, it's going to be interesting to see. I mean, he co-sponsored a number of bills, relative to biofuels and ethanol and things like that. So I think there are a lot of questions, have his opinions changed or softened? Certainly we've talked about it a number of times here lately that these appointments, and I know he's going to be selecting a Secretary of Ag here coming up shortly. All of these things, the markets are finicky and trying to digest what this really means. A few thoughts there, Justin.
Yeah, it's a lot of interesting points there. So I think Dustin's first point about getting enough corn acres here, I agree with. I think we are doing a lot of business, and you can call it front loaded, and we just don't know if it's front loaded yet or not. It depends on the safrinha crop and if they grow a big crop. We could just have a big export program because we're one of the only games in town with a big carryout. So when the road's tight and you have the supplies, that can actually be pretty bullish. The short run, it can be bearish just because you have to work through that. But it's nice to have, when you're in a tight global situation, when you have all the extra stocks. So that could be a really positive for U.S. ag. On the soybean front, we've talked about this, that, we lost some yield. The export number that we have written down is already really big. So if they grow a big crop in South America, I think the issue that we're running into right now is, which crop needs more acres in the U.S. And so I think right now the attitude's like, well, we don't really need corn or bean acres. We definitely don't need more bean acres. So we're gonna grow more corn because we don't need bean acres. So I think that's some of the back end weakness, right or wrong, with the 25s. But like I said, so much, and like Dustin said, so much depends on, there's hundreds of millions of tons of crops that have to be grown to make all those things true in South America. So, we're in November. The crop is far from being made. We've had some good rains after a slow start. So you're getting hedge pressure, but I think there's a lot to be seen here, and we're not expensive prices by any means. We're $10. By all means, that's kind of on the lower end of ranges for the last 10 plus years. So can it get cheaper? Absolutely. But I don't think there's much weather premium at all for new crop prices. You talk about biofuels and we just did this giant run up in soybean oil because it became the cheapest in the world. It got priced with used cooking oil. We've talked extensively about that subject here. And then, so we ran in a bunch of shorts. We made a really good trade, and then we've just absolutely pounded the market the last few days. And I think some of it was this EPA talk. At the end of the day, it'll be interesting to see how this all plays out, but we've, renewable diesel, for example, it's been heavily sponsored by both ag and by the petroleum companies. And if Trump really wants to go, drill and have super cheap energy here to compete globally in manufacturing and bring more factories back, I would think renewable diesel would be a really good strategic thing to keep supporting. So I think there's a lot to be talked about there. I think one simple thing would be get rid of the loopholes with used cooking oil, and you don't have to go, grind all your beans. We would already have, we would already make ag happy and, a lot of other things and block some of these subsidies to China that are coming in for, especially the California requirements. So I think that maybe was a hit, initial reaction because we'd already had such a big rally in soybean oil that it was easy to have a big sell-off. But I'm just not so sure that that's going to be the idea in here and just really screw over hundreds of billions of dollars of projects that just got done getting built.
Yeah. Be nice if he comes out and supports it right away, just make it easier, but
right.
It can never be that easy. Ben, what's on your mind this morning?
I think it's interesting to see what a beating wheat has taken with, fairly tight stocks there in the U.S. I'm kind of shocked. I guess the mechanical nature of heading into delivery and option expiration and maybe a fair amount of speculative money in there, it's taken a pretty good beating. Corn's been a rock. So I think we're back to the mechanics for the next 2.5 weeks, and it's going to be hard to hold these markets up. But again, like Justin said, we don't know if this demand is front loaded or if it will just continue. So I'm more worried about corn being just anchored in place because beans wind up being so burdensome, looking kind of over the horizon a little bit. And what is the proclivity for managed money to want to come in and really get long corn? So,
to add to that, maybe, Ben, some of it's the currency stuff too. If you look at, corn, we kind of ran out of corn competitors, right? You've got Ukraine on a small scale, yep. Brazil, but wheat's got a lot of competitors. And when you have the dollar do what it just did, that probably affects beans and wheat more, especially when the real goes down. So maybe currencies are affecting wouldn't surprise me wheat and beans more than corn because of that reason.
Yeah.
That'd be my only comment to that.
Very good. Any other thoughts here this morning, guys, as we come into the open?
Yeah, Dan.
Good.
I was just going to talk about the cash market kind of things. Seeing here,
Yep.
with another sale to Mexico. I was checking the rail this morning on that. Still strong. After the close today off the March, you're backing up close to 470. We haven't seen that kind of price on the board since June. So if you're looking to, get some price during that JFM timeframe, give us a call. We can look into your area and see how it's looking for you.
Oh, very good. Appreciate the update there. Ryland, real quickly here. Yesterday, second day of small gains for cattle. And interestingly enough, the open interest in hogs is not it's not breaking. So what are your thoughts?
Yeah, it's kind of status quo right now. Overall cash, we did see a little bit of activity in the north, 186. I think everybody doesn't want to believe that cash could be that weak, but I think overall the anticipation is for a lower market. So we're just kind of languishing at this point right now. We did kind of bounce back yesterday, but we're just seeing kind of a mixed beef market coming into today. I think everybody kind of expected lighter kills as well, just because of the holiday. So we'll see. It sounds like asking prices were going to be around 188 to 189. And at this point, I think it would definitely catch the market off guard if we saw a little bit of an uptick. But overall, this week, seasonally, you're typically kind of weak this week and maybe a little bit firmer next. So we'll see if that comes to fruition. All eyes are going to be on the export report as well, see if there's any kind of new demand that we're seeing. But it's kind of doubtful with what's going on in the dollar. So overall, just kind of watching for cash weakness this week and maybe a bit of improvement next week on the cattle side. But yeah, and hogs, big down in bellies yesterday, $11.56 came off of them. So we're seeing kind of a new low for the move there. And I think that's where a lot of the kind of concerns may start to develop if we see that trend continue. Cash market was up though. So we still have this big discount here. It's like a $7 discount. It's not abnormal at this time of year to be that wide, but I think overall everybody is kind of thinking what's going to blink, at this point, if cash is going to start moving in that direction or if futures are going to have to come up here. So I think overall you just got still a little bit optimism in the performance that we saw yesterday, but overall, you got to think that at some point the dollar is going to make a difference here, as we kind of get into Q1 for next year.
Very good. Appreciate the updates there. One thing to note, export sales will be delayed till Friday, so we won't have that report out tomorrow morning. Got pushed today due to the holiday, so we'll take a look on that on Friday. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. It certainly helps us out and keep you up to speed on everything that's going on with AgYield. So once again, thanks to everybody that tunes in on a daily basis there. We're doing this live every day that the markets are open at 8:15 Central Time on X, Facebook Live, and YouTube Live. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.